Okay, guys, so today is the Fed's minute report. Honestly, I'm kind of confused. So, what time did the market close? I thought the market closed early today, but Nvidia looks like it's open. So do some of these other ones. I mean, the volume is definitely light, but maybe they did close. Is this the equivalent of like pre-market or something? Let me see. Because like, look, level two's rolling. Yeah, so it looks open. So is this like extended hours trading? Somebody might be able to help me out with this. It's interesting. All right, so the Fed minutes report breaks down the previous Fed meeting. So, but I think the futures market is also closed right now as well. But put this scrolling at the bottom. Also get some music playing here as well. Let me catch back up in the chat too. It's a half day. Yeah, but so if it's a half day, how is Nvidia moving? Look, this was a minute ago. This was 2 minutes ago. Like, so Nvidia still moving despite the market closure. Market closed here. You can see the volume drop off on the charts. Like, look at the volume drop off here on the Q. But regardless, I guess I think the New York Stock Exchange is open still. I think that's what it is. So the report is coming out about 28 minutes or so. Put a timer up. So yeah, I got you here. It's about 28 minutes from now, 27 and a half, 26 and a half minutes. So here's the timer. So we got the timer up on screen. Options are closed, but futures are open still. Are they really? Wonder if you got even better like choppy behavior today. Do you think crypto will go down more? Yeah, I mean, I'm gonna put Bitcoin up. There's Bitcoin. Bitcoin is still pretty slow today, though. It's been slow basically all morning. Um, looking kind of weak earlier. I'll do what I did earlier, where I put the gold chart up here, and then we'll put the timer up on the side. I'm really curious about what kind of interest we're going to get. I know I probably should have started a little bit later, but again, I am on vacation right now. Again, I'm still kind of confused about the market and how it is still showing open, where I mostly thought the market was closed today, all of it, and so I didn't think we were going to get that much like hype from the Fed minutes report because the market was closed. But again, these charts are moving. Like, look, Nvidia. So it must be the equivalent of maybe extended hours trading. Let me ask what time extended hours. Let me get AI out. AI will probably help me here. Let me pull up Chat GPT and ask it. Let me also get some music playing here. Um, so I'm using AI. There's Bitcoin. There's the Q. Stock market typically has shortened trading hours, closing early at 1 p.m. Eastern time. So it's 136. Yeah, I'm confused because like TOS charts are moving. Like, look, you can see Nvidia trending down. It's actually dropping. Yeah, so stagflation is possible. Is the Canadian market still open? I'm not sure. Guys, at the 2 p.m. today market will be able to be traded. I'm not sure. It's weird. Again, it's really strange because, like, look, okay, level 2 is moving, so some orders are going through. Nvidia is moving here as well. You can see the orders at the bottom. Really strange, though. Yeah, so AI is not really much help. So I guess what we're seeing is extended hour session. So the FOMC is in 23 minutes. Yep. Yeah, so here's a timer. Yeah, we got 21 minutes left. Chewy, where's Chewy at? Chewy looks closed. Still green on it though, but it looks closed today. Hours are so light. Y'all just be careful. We'll see if the market even moves. Again, here's Q in the middle. Q is still up. Pretty good day today on the Q. Q actually had a very strong day. Did the Q break lifetime highs? It did. So the Q broke lifetime highs today. Again, if we look at Nvidia, wow, Nvidia almost back up to 130s. Yeah, I'm very green today. Wow. Tesla helping me out today a lot. So is Nvidia. Gold. GameStop. MU doing really well. I'm very green on MU today as well. Nike's still red. That's all right. We lowered some of that position earlier. PayPal green. We are green on Shopify also. And so yeah, we're going to use AI to interpret this Fed minutes report as well. It should give us some more detailed analysis of what's going on. Negative news, you guess people say there will be 52 to 53 correction with a big bull run to 90K plus. Maybe. We're already pulling back to 60K on Bitcoin, so you might be right. We broke into the 50s for a little while as well. SPX going wild. Yeah, look at the Q, man. Q's flying up today. Again, look at the S&P. Broke lifetime highs again. You know, so again, the S&P up huge. It's crazy. Where's Apple at? Apple had a pretty good day. It's at 220s now. Apple had a decent day. Yeah, they're talking about him stepping aside. We'll see if it happens. All right, guys, we got 18 minutes. I'm seeing price action on Thinkorswim. Again, you can see my prices here. There's Apple. I mean, the volume's light, to be fair, but there's still price action. Like, look, this was at 12:14. Like, this is all the way back. Right now, it's Central Time is what my clocks are set to, because that's where I live in Texas. But see, this is 141, 140, 139, 138, 37, so forth. So, I mean, the volume's noticeably light, but it's still moving. The Q's pulling back as well. Maybe it's futures related. But again, Apple doesn't make sense because there's no such thing as stock futures. So let's check regular futures here. Looks like futures are still going. NQ4. Let's try it. Yeah, so here's futures. And I believe these are still rolling strong today. Yeah, so here's futures. Actually, no. Futures have completely stopped. Futures stopped at 12:15. So futures aren't going either. Yeah, futures all stopped at 12:14, 12:15. So these are still. Gold and silver. Yeah. Well, the market's closed, but again, Apple's still moving. Tesla still moving here. I mean, it's lighter volume for sure, but look, technically the market closed here at 12, but it's still moving. Gold. Put gold up, I guess. A lot of people want to see gold anyway, so we'll put that up as a big chart. There's gold. Put Bitcoin up here. All right, chat, 15 minutes. Bitcoin. Here's gold. Yeah, it must be after hours, which is fine. Gold doing very strong today as well. If you look at the hourly chart, here's gold over the last few days. Still pretty stagnant since getting over 2400s, which I believe are the lifetime highs. 2454 is the new lifetime high. So, but you can see the range. Gold's been pretty much flat. If we look at like the Q, ripping over highs again, it's crazy. Yeah, we're looking at gold. Again, this is going to be breaking down the FOMC from the last meeting in May. So it'll be really interesting to see what happens. Bitcoin always goes vice versa dollar index. Yeah, I mean, that's typically what equities do also. It's closed because it's the day before. So for all my out-of-country viewers, we got a couple hundred people here right now. To all my out-of-country viewers, the stock market is closed tomorrow, July 4th. It's the 4th of July. It's the American Independence Day. And so with that, the market's closed tomorrow. And today, since it's the day before and a lot of people travel on the 4th of July, we have shortened trading hours today. And so while you can still see some charts move on my end here, you can see gold, the NASDAQ 100, Bitcoin. Equities markets are closed right now. They closed at 1 p.m. Eastern today, or noon Central Time. So they closed about 45 minutes ago. And now we got the FOMC Minutes report. Today we had the prelim payroll numbers. Friday, when the market reopens, it's going to be a really busy day. We're going to have non-farm payrolls, unemployment. We're going to have the payroll report, which is a really interesting telling report on the current state of economics in this country. We're going to have to see what they say. Honestly, I drank this yerba mate. Oof, dude, I just powered through this whole thing because I was thirsty. I didn't realize it had so much caffeine in it. Yeah, the NASDAQ is almost doubled in value. The NASDAQ is a little bit more tech heavy versus the S&P. So the S&P is kind of like Walmart and stuff like that. And they're basically the same. Like they're slightly different. The Nasdaq is 100 stocks. The S&P is 500 stocks. So the S&P in that regard is more diversified, and so it has less. It's less tech heavy and more diversified. The QQQ, or the Nasdaq 100, is less stocks, so it's less diversification, but it's more tech, which is usually what grows big over time. So yeah, that's the difference. Is Q's more tech heavy, so it's going to see a little bit better growth than the S&P usually. And if we look at the SPY here, or the SPX versus the NDX, which is the NASDAQ 100, put up a yearly chart. They both did really, really well. S&P was at 4,400, mid-July or mid-2023. But and so it is. Yeah, it's up about 25% over the last year for the S&P. The NASDAQ is up like 25% roughly. Yeah, roughly 25% over the last year, if my math is right. So yeah, I mean the NASDAQ's doing a little bit better than the S&P. They're both doing well, but the NASDAQ's doing a little bit better. Gold, on the other hand, is up. Gold is up about 25%, and gold looks like it's up about 23% if my eyeball math is correct. But yeah, the thing about all-time highs is there's no resistance above it. A lot want to short up there, but those shorts end up getting squeezed with no bull and resistance levels above. Yeah, for sure. I don't ever like shorting the top. Shorting highs is risky because you never know what's going to happen. You really don't. Like, you don't know if the market's going to turn. You don't know if the market's going to correct. You don't know what it's going to do and how it's going to go. And so you just got to be careful not to get in its way. And I usually stop buying up stuff at a certain point in time instead of just kind of trying to pick the top. I get a lot more hesitant as we push higher and higher and higher, but it is what it is. It's kind of something you got to do sometimes. I have whiff, dog with hat, celebrating 4th of July. Yeah, y'all be safe. Yeah, I'm looking forward to the day off too, brother. Yeah, for sure. I'm gonna sleep in and sleep good. Now this is for gold. I don't know. Gold has had a really good year. A weekly chart. Gold's had a really good few years, but gold is tricky because you don't know when gold's going to do one of these big pullbacks. You see, after 2008, gold did really, really well. People were fearing it. It basically doubled, and then it corrected a lot, and now it's been on another big run. And so we'll see. Amazon was the move. Yeah, I mean, Amazon's strong too. Yeah, the FOMC Minutes report drops today when the market's closed. I'm not sure why, but it does drop today when the market's closed. It's a little odd, of course. All right, so drinking my water. Yeah, it does close early today. Most of the market's closed. We don't know what it's going to mean. So the FOMC Minutes report is a detailed file that breaks down what they said in the last FOMC meeting, right? So today they're just going to break down the big stuff that happened during the last FOMC meeting. Is all this report is. It's a detailed breakdown of the last FOMC meeting, and we're going to use AI to interpret it and see what the market does. Specifically, gold. Gold will give us a good indication on how the market would respond to this. Even though the SPY looks like it's moving, it's still technically open somehow. I guess extended hours trading technically means it's open, but yeah, you can see the SPY is still technically moving. I'm not sure why, even though the markets are closed. Gold is still open, so you can look at gold. It's at 2366. Bitcoin is open, obviously, as well. It never closes. Bitcoin is currently at 60.5K. How does this affect the market if the market is technically closed? Well, we'll see how it affects the market Friday when it opens back up. We'll see if we open up or down on Friday because of this, right? And I think we can watch gold to get a good understanding in that way. Watch gold, see what gold does. If gold goes up, we can likely assume that the S&P and the NASDAQ will probably move up too. Yeah, international markets are open. Yep. I had to fix something. All right, so we got 5 minutes basically left. We're watching gold. All right, so we got extended hours today until 5 p.m. Eastern time. So that's what this is. All right, so we're going to cover this live as it drops, waiting for it to come out. See how it affects everything. All right, guys, 3.5 minutes left. 3.5 minutes. Yeah, this is why, like, a lot of people telling people the market was going to crash and all this stuff. The news getting digested now is that Harris might step in tomorrow, is what a lot of people are talking about. The Bears, yeah, Tesla flying up right now, man. It's honestly ridiculous. Data coming out after market close. Well, I think the market's technically open right now for extended hours trading is what we see. So gold, SPY, you can see the SPY still moving. Again, look, we still got candle movement here. Like this is 155, 154. So this is on track. It's just light. Volume's very light. You can kind of see the volume bar here. Like you can kind of see how tight the volume is right here. There's just not that much volume, but it's still technically open. So again, we got a couple minutes left until the Fed minutes comes out. See what we get. I know I'm a little bit late streaming this, but nobody else is covering this at all, so you're welcome. We're here to cover it. And yeah. It's not a speech. It's not a speech. Let me do a poll here and see what you guys think regarding this. Let me do a poll here and see what you guys think regarding. Happy 4th. Hey, thanks so much, brother. Appreciate you since day one. Thanks, Kay. Appreciate it, man. Thank you. Is the after hours trading away for the big guys to control the market? Not really. I mean, it's just, okay. So typically, okay, this is how they designed the market. You can tell this is how they designed it, right? Like you can genuinely tell this is how they designed it. They designed it like this because they need a point in time in which they're going to allow news to come out. So earnings drop in after hours, right? Some earnings drop in pre-market. You know, other big news stories drops in pre-market. You know, fundamental executions of like splits and stuff like that happens when in pre-market. So these are times when news is released. All right, guys. Hey, we got 1 minute left. 1 minute left. We're like OnlyFans for money market. I mean, listen, that's what we're here for. Top 3 stock market OnlyFans in the world right now, guys. I appreciate it. Hey, thanks, Kay. So we give everything away for free. We don't charge to see these goods, you know. And by goods, I mean stock market information. Okay. Get your mind out the gutter, guys. Here we go. Here's the report. It's coming out right now. 20 seconds. I'm going to put it in sub only mode just so you guys can help support the channel. We appreciate it. There you go. Sub only mode. And here's the report. It should be out live right now. So let's see what this report says. Again, we're going to use AI. FOMC Minutes 2024 minutes report should be right here. The June minutes. All right, it's not out yet. It should be dropping right here. So we're waiting for it. Hold on. There's the April, May minutes. Waiting. Chat, waiting for the minutes report. Give me a second. We're waiting for this. All right, there's the minutes report. All right, so look, I'm going to take AI and I'm going to interpret this really quickly and give you guys a really brief breakdown of it. Let's see what this says. All right, guys, so all right, so again, we need a much larger summary. So we're going to break this down. It's a lot of paperwork, but the good thing with AI is that I can literally copy and paste. All right, so here is the developments let's do 200 words. All right, so here is open market operation news. Okay. So the minutes report from June 11th highlighted developments in financial markets and operations. They eased in financial conditions eased due to higher equity prices reflecting reduced recession odds. So basically what the FOMC minutes report stated, the last FOMC meeting, financial conditions eased due to higher equity prices, reflecting reduced recession odds. Nominal treasury yields declined, driven by lower real yields, though sensitive to inflation and labor market data. Inflation compensation fell, especially at shortened horizons, but longer-term expectations remain anchored. Policy rate expectations. Futures implied slight federal fund rate cut by year end, driven by perceived risks. Medium expectation for rate path shows little changed. The balance sheet policy expected end of balance sheet runoff shifted until April in 2025. Okay, so basically, they don't think they're going to end QT until April next year. Little change in expectation about the portfolio size at the runoff end. The European Central Bank and Bank of Canada began rate cuts. Unsecured overnight rates remained stable. Repo rates firm near end of the month. And that was basically it. So again, we're going to keep detailing this chat. That was the first step. Staff review of the economic situation. And again, we're breaking this down in summary. All right, so U.S. economic activity expanded at a solid pace in 2024. Job gains remained strong, although unemployment increased slightly to 4%. Labor force participation and employment to population ratios decreased. CPI inflation, measured by the PCE price index, as well showed 2.7% increase in April, with core PCE at 2.8. CPI for May indicated 3.3 and 3.4% for core. Long-term inflation expectations remained stable, according to the FOMC Minutes report. Labor demand and supply. The labor market showed signs of better balance. NFP data grew at a slower rate in April and May compared to the first quarter, and unemployment rates for minorities were higher than for others and for whites. Nominal wage growth continued to decline, with 12-month change in average hourly earnings at 4.1% in May. And again, I'm just reading this off the FOMC Minutes report summary. Real GDP increased modestly in the first quarter, influenced by negative contributions from inventory investments and net exports. Private domestic final purchases rose at a solid pace. Real exports of goods increased slightly in April, while, let me make sure. Okay, I just want to make sure y'all are hearing this. Again, real exports of goods slightly increased in April. Imports surged due to higher auto and capital good imports. Nominal trade deficit widened. In terms of foreign GDP in the international economies, Europe recovered due to a strong service sector and emerging market economies, including China, saw growth driven by external demand and policy support. Recent data indicated a slowdown overseas in China, though. Inflation eased in advanced foreign economies as well, though core non-housing services inflation remained high due to strong wage growth. In terms of financial markets and policy rates, financial conditions with higher equity prices led to eased financial conditions. Nominal treasury yields declined due to lower real yields. Inflation compensation decreased, especially at shorter horizons. Yeah. Okay, so we're going to continue to the next section here. We're about halfway through. So now to go to the staff review of the financial situation. Again, we're using 8i to summarize this. All right, so yeah, federal funds rate and treasury yields. The market implied path for the Fed funds rate indicated a possible easing of the rate by 2025. Nominal treasury yields declined across maturities. Bond stock indexes rose significantly due to positive investor outlook on corporate profit and economic activity, and yield spreads on the corporate bonds remained low, and volatility of the S&P index was modest. In terms of international markets and dollar movement, mixed change in foreign yields, with declines in U.S. yields offset by positive economic data in Europe and restrictive ECB communications. The dollar also depreciated against most AFE currencies, but appreciated against the Mexican peso due to policy uncertainty. Short-term funding market stable conditions with average usage on the ONRRP facility remained steady. Borrowing costs for mortgages, credit cards, and auto loans stayed high despite slight declines. Financing was available in credit markets for large and middle corporate bases, while credit availability for small firms remained tight. CRE loans grew, particularly in multifamily and non-residential sectors, with a rise in CMBS issuance. Overall credit quality for large firms and municipalities remained solid. Deterioration in credit quality for CRE borrowers, with rising delinquency rates, especially in the office, hotel, and retail sector. So maybe if there's a way like this, what this could mean is maybe shorts on potential office, hotel, and retail sectors could be like a trade idea that you get from this. They saw deterioration in credit quality for CRE borrowers, high delinquency rates, especially in offices, hotels, and retail. Increased delinquency rates for credit cards and auto loans, indicating household balance sheet strain. All right, so we're going to continue to read here. Again, we're a little bit more than halfway through. The economic forecast prepared by the staff for June meeting was similar to the projection at the time of the previous meeting. The economy was expected to maintain a high rate of resource utilization over the next few years, with real GDP growth projected to be roughly similar to the staff's estimate of potential output growth. The unemployment rate was expected to edge down slightly over the remainder of this year and the next, and then to remain roughly flat in 2026. And so total and core PCE price inflation were both projected to be lower at the end of this year than they were at the last year. The staff's inflation projections for this year, which included a prelim reaction to the May CPI data, were a little changed on balance from the inflation forecast at the time of the previous meeting. The inflation forecast was higher, however, than at the time of the March meeting. In the March summary of economic projections, inflation was still expected to decline further in 25 and 2026 as demand and supply and product and labor markets continued to move into better balance. But by 2026, total and core PCE price inflation were expected to be close to 2%. At least that's what the staff economic outlook says. And that's what they want to happen, right? So maybe a little confirmation bias there. Staff continued to view the uncertainty around the baseline projection as close to average over the past 20 years. Risks to the inflation forecast were seen as tilted to the upside, reflecting the possibility that more persistent inflation dynamics or supply side disruptions could unexpectedly materialize. The risks around these forecasts for economic activity were seen as skewed to the downside on the grounds that more persistent inflation could result in tighter financial conditions than the staff's baseline projection. In addition, deteriorating household financial positions, especially for lower income households, might prove to be a large negative effect on the economic activity than the staff anticipated. All right. And so in terms of outlook here, this will be the last section we take a look at here because it's very long. And the other one is just policy action. We already know what they're doing in terms of policy, what they've done already for policy here. All right. So participants projected outcomes for GDP growth, unemployment, and inflation for 2024 through 2026 and beyond. They noted inflation's significant decline in 2023, but limited progress towards 2% in early 2024. Inflation showed signs of moderation, especially in core PCE and services. Wage growth declined, reflecting easing labor markets and pressures. Still, though, participants highlighted the need for sustained disinflation and emphasized concerns over high inflation's impact on households. They observed a better balance in labor market conditions and expected economic growth to slow, aiding disinflation. Risks include potential economic slowdown and persistent inflation due to various factors. Monetary policy remained restrictive, with no immediate plan to lower the federal funds rate until more progress towards the inflation goal was evident. They stressed data dependence and clear communication about policy approaches. All right, so that's basically the Fed Minutes report, chat. I hope all of that made sense. I hope summarizing it made this a little bit easier. The market hasn't really moved. Again, the market's closed today. I didn't think we would get too much craziness today. What I got from this report here is that essentially they're going with a data-dependent approach. They're not going to cut just because people want them to cut it. We'll see if they stick to that, but that they're going to go by the data. Right now, the risks are both economic slowdown and inflation, right? So I know people are going to say stagflation, and I understand that, and maybe that's what we're in right now, but we still have pretty low unemployment. We'll see what happens. I think our number one priority should be inflation over anything else. I'm not as worried about economic slowdown as a lot of people. Maybe that's just me. Everybody's different. And so again, yeah, we'll see what happens here, chat. No bullish cuts or bearish. I don't know, man. Some cuts, when they do cut rates, sometimes that's a bearish thing as well. Yeah, so the next FOMC meeting is going to be in 3 weeks. This is the minutes from the last FOMC meeting from the end of May. And So that's what that last report that we just went over was just the minutes, kind of a detailed breakdown of the last FOMC report. So yeah, we'll see what happens. That is it for today. We do have non-farm payrolls and unemployment coming out Friday. And so Friday we have the non-farm payrolls and unemployment report. We'll see what that looks like. That should be interesting. And yeah, with that said, I'm going to go ahead and get out of here, guys. Also, if you want to check out my sponsor, if you want to day trade gold, you can day trade gold. You can day trade the S&P, the NASDAQ. In futures, you can do so in these funded account programs like Apex, and there's no PDT rule. You can day trade short, buy market, sell market, very similar to day trading stocks, but your risk is much less. Apex gives you a demo. They test your skill with the demo. If you could pass that test, they fund you. If you can't pass that test, you only lose what you pay for it, which in this case, the base one, which if you pass it, you get $25K in funding. It's only $35-$40. So if you lose, you're out $35-$40 a month if you use my coupon code. If you pass it, you get $25K in funding with a 90% split. You got to make $1,500 in profit on a $25K demo without losing $1,500 first and following their rules. You could also get the $150, $250, and $300K challenges for the same price, where you get tons of funding. And it's just a great way to learn how to day trade with limited risk. Although, again, they're a sponsor of mine. They pay me money, so of course I'm biased. Understand CFTC 4.41 hypothetical or simulated performance have limitations. Also understand all the rest of this stuff here. Unlike actual performance, simulated results do not represent actual trading in these funded account programs. I'm always trying to be transparent and honest about this. So yeah, check that out. And yeah, here's the link if you want to check it out. Coupon code BT. Beginner Trading. Y'all have a safe and happy 4th of July. It is the 4th of July tomorrow. I know a lot of people are going to be like partying and doing all this stuff. So again, y'all just be safe out there. And yeah, markets didn't really move, to be honest. Gold didn't move much. If you want the page where this news came out, the news came out right here. So here is the FOMC Minutes report that was just released today, about 13 minutes ago. Yeah. Here's the FOMC report. I just put it up in the chat. So this is not a press conference. This is a Fed meeting reaction to the last meeting. So the meeting from mid-June. This is a detailed breakdown on like why they chose to make the rate decision they did in the last meeting. And that's all this is. It's just a detailed breakdown on why they did what they did, what they're doing. And yeah, you can find the report right there. Good luck, guys. We'll see you guys later. Y'all be safe. And yeah, y'all have a happy 4th.